And Lana, you're driving, right?
I'm doing the slides.
Oh,
Nancy,
you're doing the slides. Okay, good.
Yeah.
And you have the outline, correct?
Yeah.
Okay.
But
We'll
it's
give
all
it,
really, it's all in the slides, really.
okay. Well, out of respect for, I'm a big person that have respect for all the people that show up on time. I like to get started. So good afternoon. My name is Marta Alfonso. I'm the president of the Florida Academy of Collaborative Professionals, and I'm here to welcome you to this really special seminar we're doing today at the Working with Family Law Software, which is dealing with creative financial resolutions and emotional issues that you find in the collaborative process. And to do this, we've got three people here today. The first one is myself as a financial professional. We have Nancy Chussow Schaefer, who is a lawyer and the director of Family Law Software, and our dear esteemed friend, Lana Stern, who is a mental health professional. Let me give you a little background about each person. Nancy is a principal in Sage Counsel. She concentrates on matrimonial law, litigation, mediation, and collaborative. She's a fellow of the AAML, and she's been a super lawyer and a leading lawyer for many years. And she's been in practice for more than 40 years, and she became the full-time director of sales and training at Family Law Software. Lana is a licensed psychologist, marriage and family therapist. She's a certified mediator, and she's an accredited family law facilitator in FACP. She is someone that's been published. She is someone who trains frequently, and she's an all-around super mental health professional. Myself, I've been in this field for over 40 years, which shocked me this morning when I realized that. And I've been doing litigation support, damages, forensic accounting, both as an expert and litigation consultant. I'm accredited, of course, in the collaborative process, and I'm a CPA. I do valuations, forensic work, and I'm a lawyer. So with that, all I'm going to say about that is you've got people that know a little bit about this process. So why don't we go ahead and go to the next slide and talk about what we are going to talk about. It is about trying to get into more complex topics and trying to see how we can integrate family law software for those of you that use it to be able to create and present financial resolutions in collaborative cases, but you might find that it also works for your other cases as well. I think we'll try to provide commentary from the three perspectives. We will, try to stay focused on Florida law. And certainly, any of you that want to ask a question, we have a chat room, so please do so. There's only 23 of us, so the nice thing is that means that you get a good shot at getting your question answered right in the seminar today. So with that, do we want to go ahead? These are the things we're going to cover, which is Nancy will go into a bit of that. So go ahead, Nancy.
So we're going to be talking about financial issues relating to the children outside of just guideline support. Because as we all know, guideline support is only the beginning of covering a child's needs or alleged needs. We'll talk about alimony. You guys in Florida were dealt a lovely hand with a alimony statute that has some ambiguity in it. So we'll be talking about how to deal with that. And we'll also be talking about some different asset classes like RSUs and stock options, things that you can do with family law software. We'll look at marital, non-marital. All of this, of course, could take like 10 hours. We have an hour and 15 minutes. So we're not going to be answering any deep questions today, but we're looking at sort of an overview and how the software can help you in your collaborative cases, work with your counterpart counsel and your experts, your neutrals, to get the case moving. Okay. Lana, would you like to introduce us to our
Well,
scenario?
we of course have to have our couple. So meet Jane and Jim. They've been married 15 years. They have two children, Jennifer, who's 13, and John, who happens to be on the autism spectrum. Very interesting. Jane's a dental hygienist, works, I guess we could say part-time, between 25 and 30 hours. And she does this mostly so she can be available to the children when they're not in school. Jim is he works in sales as a manager. He works full-time, plus he often works, overtime, long hours when he's involved in a big sale for the company. John, who was diagnosed as high functioning on the autism scale, has had a tutor since he entered kindergarten, and he's actually made additional progress. And then he receives some support within his school, and he attends a special tutoring class 3 times a week. Jane and Jim disagree on his ongoing need for additional support services, such as continued tutoring, having a therapist, and so forth. Jane often has to miss work to attend John's needs for either medical care or sometimes behavioral issues at school because Jim is not available to assist because of his work. One of the issues perhaps between Jane and Jim is that Jim thinks that Jane is a little too protective of John. Anyway, Jim's income last year was $394,000 from his employment, and that includes a salary of $150,000 plus a performance bonus of $100,000 and a company bonus of $50,000. And the value of a company car, phone, health insurance for Jim and his family, including medical, dental, vision, country club dues where Jim entertains customers, and also where his wife and the children can go, which is about $94,000. Jim also has received stock options and now receives RSUs each year, grants, and a vesting table. Typical of most fact patterns, I would like you to, because we may want to put that back up again just for a second.
Yeah.
I would like you to sort of take a look at the fact pattern and think, can you identify what you think are going to be some of the issues involved? And of course, there will be emotional, financial, psychological issues involved. So take a minute to think and please send your answers in so that we can take a look at them.
So you'll see at the top of the slide here, there is a website, a link, and a text link that you can send your issue spotting to. Try and use just a couple of words to identify the issues that you see in the scenario. So that's, you send it to Nancy Chauso Schaefer 477. And your message is going to 22333, or you can do the website poll everywhere, pollev.com, and then Nancy Chauso Schaefer 477. So if you can do that, this will load up with your answers. I'm going to go back to the description of the slide, if I can get it to work. There you go. Here's our scenario. So see if you can identify some issues there that we may need to discuss in the collaborative process. Give you guys a minute or two for those. And if it's not working or if nobody's responding because you're busy eating lunch, that's okay. We'll move on after a moment or two. All right. Needs, special, costs. Needs, costs, special. What else we got? Couple people responded. There we go. Spousal, good. Isn't this cool?
Yes, it is. I like it a lot.
I love technology. All right. So there's a lot of financial, emotional issues here. There's a lot of issues that would normally be addressed, but might be more complicated because of some of the little things we threw in there. So income, definitely an issue here for both parties. All right, let's move on. We can come back to this. If you haven't put in your information yet, keep doing it, and we'll come back to this slide in a little bit. Okay, so let's talk about the collaborative process.
So the process itself, as it relates to these financial issues, it falls to the role of the neutral financial professional. One of the things that we do, of course, is the financial librarian portion, which is collection of the information. But the other thing we're doing is getting into trying to brainstorm with the parties and the team about the real financial resolutions of the case. I think the other thing we try to do is working with the mental health professional. We get into identifying, excuse me, the emotional component to have the mental health professional tackle the anxiety and make sure that as many issues as we can at that moment, identify them and try to come up with an approach to resolving them where possible. Certainly there are ones that fall within the law and those we need to address. And then there's some that some of the parents may decide they want to address or talk about. So we'll facilitate that discussion as well.
And in the collaborative process, where we would probably, in a case like this, bring in a child specialist because we have a special needs child who would work, hand in hand with the financial person and the attorneys. And of course, the mental health person, the facilitator, would be dealing with what seem to be some underlying issues between the couple that may be related to the child who is special needs, and that may be a component that they have to deal with financially. So the future of the family is really the focus in this collaborative process. And of course, it takes the financial person to be able to divvy out how to come up with a plan to meet the needs, not just of the special needs child, but the forgotten child, who would be Jennifer, who's 13 and is doing fine, but she also has needs that need to be taken into consideration. So the collaborative process enables us, with the support of the attorneys, to really put together a process that absolutely meets the needs of the children and the future of the family. Next slide.
Okay, so we go through several steps. First, let's look at what the children's needs are. One of the things we can do in family law software, and I'm just going to switch to the software itself. Sorry, share this one and okay. So I'm going to switch now to the software. We are seeing this, right?
Mm-hmm.
So we have Jennifer and John. Let's say that I didn't do this right. It's 2025. So we said she is 13. So 20, brain's not working. doesn't matter. I'll just leave that. And John, and we have two parents. And now let's look at some of the things like a budget report for the children. So if we go into adding the income and expense, we can scroll down to the children's section. Oops, that's children of other relationships. Hold on. Children for both parties. And this will enable us to put in all of their expenses. So there might be lesson expenses for Jennifer and tutors for John. So we can say that the lesson expenses for Jennifer are $140 a month, and the tutor for John is $500 a month. And then we can go to a report, and we go into more reports. And now here we have two lists to look at: reports for lawyers and financial planning and backup reports. Some of the reports are on both lists. So here we're going down to, on the lawyer list, budget report for children. And you can see that the expenses that I put in are here. So one of the things that is helpful in family law software for collaborative cases is we can put in all the children's expenses and then look at what that number really is, how they're going to cover that based on their other income and expenses. Okay.
Can they
So,
decide, can I ask you a question, Nancy? If
yes.
they decided, back to that example,
Mhm.
for like a different alternative, where instead of doing it based on their current income, if they had negotiated different percentages, could they do that?
Absolutely. Absolutely. So we can go into the data entry. There's a couple of things. First of all, if we want to not use child support as a actual guideline number, but some negotiated number, we can uncheck the box for child support to use, and then the amount goes blank. And I can put in whatever amount they stipulate to or agree to.
Okay,
And we can do the same for spousal support.
okay,
Okay. The other thing is then when we're putting in these expenses, we can say who's going to pay which ones.
and where do
And
you designate that here?
so here I'm in Jim's. I can
Okay,
go to both. And now it's going to show me both. And now I can say this is going to be 70 and 70. Whoops, 70. Or I can also, in the general list up here, I can say, let's display a field for shared expenses. And then we can figure out what those shared expenses are. So here we can say 140 is the shared expense, and then decide how they're going to be allocated.
very helpful. Thank you.
Okay. All right. So here's a question for our financial person. When you're doing these, do we include housing as a kid's expense? Or is that a family expense that is treated separately?
By the way, people can write answers into the chat box if they like when you
Yeah.
ask these questions, and I can monitor the chat.
Yeah.
So,
So, oftentimes, especially, the engineer clients and the accountants, they want to allocate a pro rata share to the children. I generally think, and this may also depend on case law, that's not a child's expense, that's the parent expense. But certainly when you think about it, having a 4-bedroom house versus a 1-bedroom apartment, you're going to have very different expenses.
Well, the one good thing about collaborative is that this is something that can be negotiated between the couple in terms of what makes sense for the child and going forward, what makes the most sense for the family.
Okay. So then step two, we're going to say, okay, now we know what the expenses are. We've created that budget report. Now the question is, how do we allocate that? And we get into a lot of emotional content here as well. Often when I'm doing these cases, I find that there's some sticky tar on the floor that keeps sucking us in. And Lana, do you have any suggestions on
Well,
how
again,
to
in
start the discussion?
collaboration, I think one of the strengths of collaborative, uh, the facilitator and the financial person often work hand in hand together to deal with these emotional issues. And it's very, very helpful for the financial person to be able to show um, different variations, which seem to make sense for the family so that they can really talk about what their real needs are instead of what case law is or if you went to court and what the judge would do. It's a much more, it's a kinder way of dealing with really the needs of the family. And I can't tell you how important it is to be able to, I guess, use this software to come up with different variations or different options, which can really help the family when they're discussing how to break down, various needs and how to assign them to different places. And that's where I guess the use of software and the communication and collaborative is so important for the family.
One of the things that I do, and Marta, I don't know if you do this as well, is I will have this filled out in terms of the dollar amounts beforehand, but have the discussion about how they're going to be paid in the collaborative setting with, for example, this sheet up on the screen in my collaborative room.
So typically we do that, we do that, Nancy. I mean, sometimes depending on, looking at the history and when you're dealing with like the lifestyle that you have somewhat done, some of those numbers are going to change because they're either deciding to go public versus private. The child has grown up from meeting a 24/7 nanny to something more current. And certainly in the case of the special needs child, there has to be some consensus as to what are the requirements, as well as the issue of what benefits they can receive from the state. So, for example, in the state of Florida, you can apply for, I believe it's up to $25,000 worth of credits showing what you get. So, all of those issues need to be discussed, as well as who's going to apply for the credits, how are they going to count, etc.
Yeah. And the other thing that I think is important is that our collaborative case doesn't have to just look at the snapshot of now, but we can look into the future and set up either the rules or the guidelines for them on how to treat things that come up later. So now the younger child with the ASD diagnosis is probably it's still in grammar or middle school. What happens when that child gets into high school? What's going to be the allocations then? What's going to be the decision-making process on his continued therapy / tutoring, etc. And then you have the issue of college, always something that clients bring up, and that is somewhat state specific.
Yes,
So,
in our case, we don't deal typically with college, although some couples want to have that clarified in the agreement.
yeah, especially if there's money set aside already in a 529 plan. So, is a 529 plan a marital asset to be potentially divided and or allocated? Or is it a child's asset? So in the program, we actually have the ability, we put in an asset. Let me just go down here. Let's say we're going to put in an asset of a 529 account. And we'll say that that's in stocks and bonds. And let's say it's worth $43,000 right now because the kids are young. But what we can do is go into more information, and down at the bottom, I can mark it as a child's asset, so it won't appear on the marital balance sheet. And then they would perhaps, in their agreement, end up with rules about how that's going to be used and when it's going to be used and in what order and so on. But those are things that are in the program to help you deal with that, those kind of difficult questions.
And again, the interplay of being able to actually look at this, and work with the parents and talk it out and show it helps tremendously in coming to a good conclusion and what is the best interest for the child. And in collaborative, that's really, you have the opportunity to do that. And this is a great asset to really being able to see it in black and white.
Correct.
Also in the program, depending on your situation, when you do the support guidelines, you can go to print guideline and we have a deviations worksheet. So if there are going to be deviations from the guideline child support, you may want to include for the court, even though it's a collaborative case, to support the discussion. We can say, yes, we want a deviation from the guidelines and make it of record how and what those deviations are going to be. So we have text fields for dollar amount deviations or reimbursements, and then expense allocation as well. So this can be very handy to be able to take your collaborative case and get it finalized in the court without the judge giving you a hard time about not having child support guidelines. And also to clarify who's going to do what and what is that situation going to be going forward. Okay. So what solutions, Marta, have you used for support when they don't want to use guideline support?
Well, I think we have some people that will open an account and agree to put money in, and then have a designated set of expenses that will hit that account. Some people also do, particularly people that are quite wealthy, that would end up paying an astronomical amount in child support that would exceed the needs, will turn around and open a trust account or a 529 and deposit in there. Some individuals will say, well, I will pay for a house, but I will do it only in the name of the children. I mean, there are many, many different ways to go at it. Certainly for children that have special needs, I think part of the real challenge is being able to estimate what the true cost is going to be for the foreseeable future, as well as through their minority years. And then there's the issue of what happens to the child depending on the amount of need they have going forward and how they're going to deal with that. And that's often a contentious issue because, particularly if it's a younger child, nobody really necessarily knows. There's a projection. So I've seen people say, well, if we can't come to terms with that today, we'll at least agree that at a date certain, we'll sit down and talk about it. And that we are committed to either making a commitment today to support that child in their majority years or not. Because the same issue comes up there. There are multiple programs that can potentially assist the adult child with either living and or working and or a stipend. So, and the parents may not be ready to deal with that or factor that into the equation.
Okay. And oftentimes in these situations, having them work with the uh, uh, mental health professional, with our coaches, to get past the fight and into the problem solving is important. Here we have two parents who have a little different view of what the children's needs might be, and mom may want some significant protections because it's very scary to have a child with some additional needs. And now she's not going to have the reliability of the two of them together supporting this child, and perhaps be scared about what's going to happen. And dad, on the other hand, doesn't want to be drained and have nothing left for himself, maybe.
Well,
So there's a lot of issues.
maybe Lana can talk about also the fact that she may know of resources that could help the parents prepare. I mean, that's not something that we would necessarily have as financial professionals, but Lana, what do you think?
Well, I think often you will have parents who view their children's issues very, very differently. And I'm thinking in a recent case where there was a child that was on the spectrum. One parent, the father, really had a very difficult time even acknowledging that the child was on the spectrum. And that influenced greatly the amount of financial support that he was willing to, to put towards that child. The other thing that I've seen that happens sometimes is there's so much focus on the special needs child and their future going forward, is that they totally forget about the other child, the quote normal
That's
child.
a good point.
Who has just as many needs and has college needs and perhaps the same type of needs for the future, but they're often neglected. So I think it really is so important to have not only the child specialist, but the facilitator working in tandem when they do a parenting plan to work with the financial needs of both children, both now and for the future. And I think college often does come up as a potential, and having the parents work together to provide for the future for both children. And that certainly is accomplished many, many times in meetings with the facilitator and the child specialist, who really does know the outside possibilities for support, financial support, what programs are out there. There's a lot of programs to support special needs children now, and they can be tapped into and built into the whole settlement procedure. So it's really amazing.
And not to get political, but they may or may not continue those programs.
Yeah, well, yeah.
Okay.
So the point is that being proactive in this process and keeping, I think, a tab on those programs and finding groups that can provide information and support, it's important. So that's how I've seen it done.
Okay. Let's move on. I'm going to do a little bit of a demonstration of stuff for the children's expenses. We're going to create a budget report. And we've already really talked about the emotional needs. So actually, I think we've already done that. Let's move on. Um, and now let's talk about alimony. Alimony, it's such a loaded word. In Illinois, where I practice, a number of years ago, we eliminated alimony. We have maintenance because it's so much nicer to pay maintenance than alimony. It just makes people, you know, do all kinds of, uh, kumbaya. But of course, it's the same thing. By any other name, it's still a rose. So let's talk about alimony.
So one of the issues that we have, Nancy, with alimony here is that a lot of people fixate on the percentage difference between the net incomes, and
Yes.
that becomes the number. And you had something that was very important on that first page, which is what's the need? And the other problem we have is that people believe one of two things. Number one, the need was the lifestyle I had before, and the parties don't make the same income now, or that the need is different because, we were going to do better, and therefore, I need 3 housekeepers when, a reasonable amount of money would only be 1. And so those are some of the battles that I've seen us get into. Lana smiling because she can think of the cases that we have dealt with.
I'm thinking of a lot of entitlement issues that
Yes.
that come up when spousal support, or whatever you want to euphemistically call it. It's a very, very, very emotionally touchy topic. And any software or any way that it can be, sort of done in a less emotional way would be very, very helpful. But yes,
Yeah.
there's a lot of entitlement involved in this.
And I think the other thing is there's a lot of societal norms within the various ethnic groups about who gets support. And regardless of whether you need it or not, just because you are either the husband and or the wife, so that I'm staying away from any particular landmines, you may not, or you shouldn't ask for it because it's the principle of the thing. And you're like, that's not the state law,
Yeah.
So it's very difficult.
Yeah.
Well, there's also a lot of attachment into the money that I made. And, if you happen to be a stay-at-home spouse, and you have a working spouse, the money doesn't belong to the working spouse, it belongs to the family. And
Right.
that also, there's a lot of ownership on the money that I earned as
Yeah.
opposed to
So
nothing.
we really, I like to talk about marriage as being not just an emotional partnership, but it's also an economic partnership. And just as if you had a business partnership, and in your business partnership, you divided responsibility. One person is the CEO, the other person is the CFO, or the CTO, or the chief cook and bottle washer. In every relationship, there are strengths and weaknesses that each party brings to it. And in a good marriage, you've got a balance. We, of course, don't deal with good marriages. We deal with the marriages that have fallen apart. So I want to talk about the different ways of looking at alimony in the program. So let's start with the guidelines that Florida enacted last year, or 2 years ago now, July of 23. First of all, if you want to use the alimony calculation, you need to check this box. We will still be calculating alimony in the background, but it won't use that number unless you have the box checked. And that's a good and bad thing. So let's talk first about term. So if we put in the date of the marriage, let's say they were married on, the typical Valentine's Day marriage in 09, or they're not that, they haven't been married that long, 2014, because that's, and they filed the petition last month, or 12/30/2024. Okay, so we've got a 10-year marriage. Now I put the date of filing in here and you saw that it turned red. What that means is that this is a calculated field. If it's a blue box, it's a calculated field. So I can go back to the data entry for the parties and children and put in the date of separation, which I said was 12/30/2024. It was a bad holiday season. And now when I go back to my alimony guideline, it's automatically filled in. Okay. And so this is a 10-year marriage, just over 10 years. 10 years, of course, is the magic divider between a short-term and a moderate-term marriage under the statute. So we have a 60% marriage duration application, which gives us about 6.5 years of maintenance. So that would be the guideline duration. Does that work for these parties, given the ages of the children? One of the things that I always raise with my clients is that just because then the kids will be out of school and you can then work full time or whatever, you're also that many years older. You don't necessarily have the experience in the workforce that would put you at a level that you can support yourself at that point. So there's a lot of emotional aspects to the party who was earning less or working outside the home less, going back to the workforce. So then we want to put in their net incomes and we'll automatically calculate this. I didn't put in these information, so I can go back to line 27 from the affidavit. And here I would put in the income. But as you can see, these are blue fields. So I want to actually go to income and expense to put in those incomes. So we know Jim's salary is $150,000 and Jane was 85, I think I said. Oops, 85,000. And that's per year. So I want to make sure I change this to be per year. And then let's also put in the additional information. So Jim has a bonus of 100,000 and another bonus, which I can put in the commission section because we don't have two bonus lines, of another 50,000. And then we also have some additional income from employer paid expenses. And this then is something that needs to be discussed and decided what happens for all of these things. So when it comes to bonuses, is it the same amount every year? Or does it vary? Could it be zero? Could it be 3 times as much? And that's a discussion that you'll have with your parties, of course. And now let's put in, go back to the alimony guideline. And here we've got their monthly incomes. So it's only taking his 100,000. If I go back to line 27, it's the 12. Oh, I did this in the wrong way because I said 150 for monthly. So let me go back. My bad. Did 150 per year. And then this is supposed to be monthly also. So I entered it wrong. I can go back in. I can hit this little calculator button. And now I can put in 100,000 here and it automatically does the monthly. And I can do the same for the commission or the other bonus. And now I'm going to put in the annual amount. Whoops. 50,000. You don't need the commas. It automatically will do the commas for you. And now we've got the additional two pieces of income. Let's go back to our alimony guideline again. And here we go. We've got her income and his income. So we know what that is going to be. And now we get into the complicated calculations in Florida. The first thing is, what is our cap? And this is a little bit open. We start out with the default of no more, no less between the two of them. In other words, there's sort of a cap of a 50-50 split of income. That's not always where you want to go. So you can change the percentage. It's a yellow field. You can always change it. Then we have a calculation of their net incomes and a maximum combined alimony amount, which is the maximum durational alimony, and what is available for bridge the gap and rehabilitative. So if durational alimony was, let's say, $5,000 a month, then it leaves $862 for rehabilitative. If the alimony is $2,500 a month for durational, now we've got $3,362 to use or not for rehabilitative and bridge the gap. Marta, how are you dealing with these different categories and allocations of maintenance amounts?
Well, typically, I think we focus a lot on the maximum monthly durational. We look at the duration as well as the amount. We will deal with the need. Oftentimes, the way we typically look at what we call, bridge the gap is we will provide for some additional amount if that's needed, but typically that type of issue is more negotiated, although there are definite limits in the statute with respect to those types of alimony. Most people kind of shy away from anything other than dealing with durational in my experience. And most people have the debate about the same things we had the debate about before. But at least the way that it's viewed is there's somewhat of a cap. And the cap gets changed by either an amount for a period of time or some additional expenses. For example, if the parents aren't living in the same location, then you end up with a situation where maybe one of the parties pays for travel or lodge. I mean, that's the way it's put together, or they pay for the house. So there's still many ways that we skin the cat. I think as a practical matter, I think where it makes a lot of impact, it was probably the less high net worth people, because they, by and large, have much more limited resources.
Yeah. So here we've got our calculation. We can put in the max durational alimony. And here's another issue that I don't know if it's real. It's in my mind, as someone who practices in a different state with different terminology and so on. If this is the maximum, does that mean that mostly we don't do the maximum? Or is it just a word that really has no meaning, and that's the number that people use?
Well, I think like I say, as a beginning point, people will fixate on that number. And the problem with fixating on that number is, again, we go back to that may or may not be representative of where they should be. And again, particularly in collaborative, we are, trying to be flexible. So there's a lot more, I'm going to call it discussion about not only a number, but what is it used for?
Okay.
Quite frankly.
So I'm going to go now to our analysis tools. And here under alimony calculators, we have a number of tools to help us look at the alimony. So we don't really have a lot of expenses in this sample file, but if we did, I could go to alimony breakdown. If I had entered all the expenses, in fact, let me do this. If I go back to enter data and I go to income and expenses, and I don't want to put in every little expense, all the bills, but I'm just going to put in the expenses as an other field. So I'm just going to put in other monthly expenses, and let's just say I'm going to go down to other, and we're just going to go miscellaneous other and say it's going to be $7,500 a month. Okay. And the description is all, and it's going to be, let's give 3750 to each of them. Okay. And here, other. All right. So we've got the description for both of them, and they each have 3750. So now when I go back to my analysis tool, I go to alimony breakdown, and it still says no alimony is necessary under the assumptions below. We're using all the expenses and child support and so on. And then this gives you a support impact table, which is the same kind of table that you'll find under what if support impact. So this is how it's divided. So let's say, okay, Jane doesn't need alimony, but she will have $2,400 left after her necessary expenses. And Jim will have $12,000 a month left after his necessary expenses. So now we get into that really bad word that we use in divorce. What's that word? Fair? What's fair? Oh, gives me the shivers. So let's look at some other issues. So let's talk about need. What does the recipient need? So if I say Jane needs $150,000 a year of after-tax income, this will now automatically show me what that would be in the way of alimony, given all the other information that we've entered. And I can do the detail, which is our short support impact report. And you can see here, they're a little closer. The living expenses are covered. And this is what that would look like. So perhaps then in your negotiating, in your collaborative session, you can then look at different options. What if it's $130,000 a month of need? Now interestingly enough, what does that number look like? Looks very much like the max durational alimony number that we looked at before. So here's what that would look like in the support impact. And then we also have an expanded report, and which gives you more detail. And there are options that you can set. So let's say I don't want to count child support. Let's make this spousal only. And then we can see that the numbers changed because we're only looking at the need with respect to spousal, not counting the support. We can also do what Marta talked about at the beginning, is how are we allocating the available dollars? So here I can say, well, what if we did 50-50? That's what mom wants here. So that would automatically give us the amount. And again, the support impact report to show how that looks. And I can continue with other options, just like I showed you with the other report. So maybe we want a 40. How does that look? That looks not quite so good. Maybe let's try 45. And it'll automatically change the percentage on the other party and give you the result. And the support impact, same thing, expanded report, options. And then once you figure out what your actual alimony amount is going to be, you can go to actual alimony and, enter what it's going to be by clicking on the link. Or you can go back to support data and put it in. So this is just what you're going to see on support data. And again, are we using the alimony screen numbers from the calculation, or calculation stays here? That's the alimony amounts on the guideline. So the calculation stays here, but we can put in whatever amount we ended up agreeing to. Okay. And then that's the number that the program is going to use for all the other analysis tools. We do also have a formula calculator. So this starts out with a percentage. And that percentage then gets applied, allows you to apply the factors. And what we've done is we've distilled all the 60 different factors among the 50 states into these general categories. And you can say, I want this factor to increase support a lot, a little. I want it to reduce support. She's young, she can go back to work. Okay. And as you move these factors around, your percentage is going to change and your amount of alimony is going to change. So it's another way of looking at coming up with a result that works for everybody. And this is kind of fun. It may not be easier in a collaborative case as you start to argue about the factors, but you could start out with neutral and then discuss what that might be. Okay. So let's say Jane was a dental hygienist, but she hasn't worked in 10 years. So she needs education and training. We'll make that high, and it adds to the alimony amount. Or you could do it in the guideline and make that your rehabilitative or bridge the gap alimony for her to go back and get the training she needs to re-enter the workforce. I think we've beat alimony to death here. So we also can do unique assets. We've got about 15 minutes more of time. I want to leave time for questions if there are any. I haven't been monitoring it. Do we have anything? Okay. So we can also use the family law software, not so much to value the assets, but to help figure out what's the marital, non-marital portion, to look at tax consequences, and to make sure that you've included all the assets. Nothing worse than getting towards the end of a collaborative and you find out that there's some other assets that they haven't told you about because they forgot. The timeshare that they haven't used in 15 years, or the cemetery plots, or the frequent flyer miles. And those come in just as you're gliding in towards home on a settlement. Suddenly there's 15 more issues because they don't really want to be done. They want to keep going. So let's look a little bit at what some of the assets and how you would do them in family law software. So we have a divide property worksheet that allows you to put in all the assets in the enter data and then would give you the result here of how they're divided. So I can put in the division, and then we also will be able to show an equalization payment or show asset classes. So maybe you want 50-50 on retirement, but a different class, different asset class on these other ones. I'm going to open another file that has some assets in it. We're going to go to this one. And so here I'm going to go to divide property. And here's all my assets are in here. The descriptions on the left, the values on the right, the parties in the middle. I can move things around by percentage, and it automatically changes the dollar amounts. And it also then automatically changes the balance. So if I was going to change this to 100,000 of the house is going to Taylor in this sample, then it automatically changed the percentages here and here. It automatically changed the equalization amount. Maybe I want a disproportionate split. Let's say we want Taylor to get 54%. It's been a tough negotiation. And so Blake is actually in the red here as far as that valuation. So maybe let's say we want 60% to Taylor. So now we're pretty close to that 60-40. And this is what it would take to completely balance. Maybe they ignore the 851. Maybe we move 851 over. We can also do side-by-side scenarios. This is very handy in collaboratives where the who gets what question keeps coming up. So you can do side-by-side scenarios here and say, okay, what if Taylor gets the house? What would that look like? And then I can do another one where we say, okay, what if Blake gets the house? And I can see the results immediately, including the equalization payment based on the percentage that I put in the divide property. So if I change this back to 50, now when I go to the scenarios, those equalization numbers changed because we changed the percentage to target. You could actually even look at different values. So you could have the same distribution, but I think the house is worth 420. You think it's worth 350. Are there houses in Florida that are still worth 420 or 350? Yeah. Then we also can look at after-tax values. This is important because $100,000 in a cash account is not the same as $100,000 in a invested growth account where it's grown, but you haven't paid taxes on the capital gains because you haven't sold anything. Or $100,000 in retirement that is going to be taxed at a later date. So we can do those calculations for you. And depending on the number of years that you go out, and for this marginal tax rate at retirement, we're looking at a number of assumptions. So you really want to rely on your financial neutrals to make sure that those numbers are correct if you're going to use this as a tool. And for the capital gains, of course, you need to know the basis. Many of our clients do not know the basis of their investments. I have to admit that I don't even know the basis of a lot of my investments. I may know roughly, but and somewhere in the recesses of my basement, there may be financial paperwork that would tell me what the basis was, but I probably did not keep good records. And of course, we've all experienced, we were with Fidelity, or we were with Citibank that suddenly became JP Morgan, that is no longer JP Morgan, and your accounts moved, and they don't keep records more than 7 years. So good luck to you on those. But you can see that we will automatically calculate the taxes and the tax rates based on the information that you've put in. What's one of the biggest questions they always ask us? Can I keep the house? Can I keep the house? I have a friend here in Illinois who's a financial neutral in collaborative cases financial planner, and her website is actually canikeepthehouse.com. So this will look at all the expenses and the income and say, yes, there's enough money to keep the house, or no, there's not. And that's a good reality check for your parties. But of course, it depends on you entering in all the information. Okay, let's go back to the PowerPoint. Oh, I want to talk about RSUs and stock options for a moment. Okay, so when we put in the assets, let's go down to investments. And I have, let's say, an RSU. So I'm going to say I have, this is RSUs, and I'm going to go into more information. And then here I can select that it's an RSU, and it allows me to put in the information. So let's say the cutoff date is, what did we say, 12/30/2024, and the RSUs are Blake's in this scenario. The value per share, let's say it's 30, and the valuation date is going to be today, 20, what's today, 27/2025. Okay, now I can add the grant. I can add each grant. And in California, they have lots of companies that do monthly grants. It's crazy, or monthly vesting. But let's say there was a grant that was given 3/1/2023, and it vests to, I'm sorry, 3/1/2026. Okay, and it's 1,000 units. We already know the value per share, so it's automatically going to calculate those units. And then, because we know the date married and the cutoff date, we can calculate the marital value, the marital portion. And we can do this for stock options too. The added wrinkle with stock options is there's a strike date and a strike price, or I'm sorry, a vesting date and a strike price, not just the value. So I can immediately change this if the value changes as I'm negotiating, or I can add additional grants. So the next grant was 2024, and that one vests in 2027, and that is 1,200 units, and you can automatically separate out. So those are some cool things that we can do with the software. You don't have to accept those numbers. Maybe you want a different way of figuring out the marital, non-marital. There's always Black-Scholes if somebody has that programmed, but it's very complicated and it's not accepted by most courts. So this is just a simple applying the marital coverature to the values. So let's talk about the emotional responses to learning about financial issues and valuing assets.
Well, from my experience, the emotional issues that most people freeze up when it comes to finances. And it really takes a very sensitive financial person to help them get over their shock sometimes over what assets they're actually going to retain or what their lifestyle is going to be in order to be able to move forward. I really do see some shock. People do go sort of into some type of shock when they
Yeah.
first realize what the financial situation will be or can be. I know I've worked with Martin many times to get through that.
Yeah. Yeah. And
Difficult.
money is one of the most emotional things that we ever deal with, believe it or not. It is not just the children where the emotions come into play. It is truly on the money issues as well. So
Money has many meanings: love, success,
value,
support,
yeah,
love. I mean,
self-worth.
there's a million meanings that money is attached to.
Yep. Yep. So we sort of put together this little slide of here's sort of your process. Um, you're first gonna enter all the information, and then you can use the technology to propose solutions. You can look at all kinds of different options at the same time. And then, of course, you need to stop and make sure you're addressing the emotional impact. If you get through that, then you can look at equalization, disproportionate, all the different options that you have. So, um, we are cleaning up here. Um, if there's any questions, we could take them now.
It is amazing what the software can do, and I've certainly been in meetings where we've had all sorts of scenarios, and so the software is extremely helpful and
I think
enabling.
there's a definite advantage to the scenario building that it can do. And it also makes sure that you're incorporating and considering, as much information as you can get. And I like the idea that you have the tables for comparison purposes. So
Yeah,
kudos to the software for thinking through those issues on behalf of the clients that use them.
right. And one of the things that we also have, I think, is really helpful is besides the numbers and all these spreadsheet looking pages with lots of numbers on them, we also have graphs. And for some people who are more visual and maybe don't really understand all the detail, we can look at those graphs to look at what is this really going to look like. So don't be afraid to use colored pictures. They help, especially in a collaborative setting.
Excellent. Well, we want to thank all of you for coming. We really appreciate Family Law Software for putting the program together and particularly coming up with the various features to share with you. And if anybody has any questions, you can certainly reach out to Nancy directly or reach out to Lana. And I know that both of them will get together and get you an answer. So I hope you have a good afternoon, and we will certainly put out the presentation for others who couldn't make it today. Oh, there's 2 questions here in the chat. Let
I
me see.
see. We've got a
Great
couple of questions.
presentation. Yes. Thank
Okay.
you. And we think so too. And again, a big thanks to Family Law Software. Have a good afternoon, everybody, and take
Thank
care.
you. All right.
Bye.
Bye.
Bye-bye.
Okay, we're done.
Yeah.
Yep.
We're almost
Perfect
we're almost
timing.
done. Martha had to go. I see George is still on. Wake up, George. I know, George. Wake up, George.
All right, I'm heading off.
Yeah.
Thank
I
you,
thought it was
Lana.
Nancy, it was very helpful for me, who's not a financial person. I want to thank you. It really helped me understand. I mean, I've seen all these calculations go on, but this is very helpful. So thank you for allowing me to join your presentation. So, bye-bye.